Hi there, welcome to Bitcoin Wyckoff technical analysis session. So after the crash, is Bitcoin still safe? Is it still going to perform well? That's a big question, right? So let's quickly dive into both the weekly and daily charts and see where Bitcoin actually is, and it's pretty surprising. So here is the weekly chart. As usual, that's where we start off with, and we're seeing this big red candle. Just the wicks are longer than what we had last week. So basically it has returned the gain of, the gain that last week has built. So it's not too bad of a scenario. It's back to 112K, and right after the wick, kind of getting close to 104K, the purple key level that I mentioned in many of the previous sessions, it immediately rebounded to within this horizontal trading zone that I shared in previous sessions. So as of now, I would consider it still within this upwards of the distribution stage. This is not the case. So these two LPSY may happen later in time. So here, as of this moment, as long as the price is still within this box, I would assume that we're still at this late stage or mid stage, if it's the yellow scenario, of the distribution cycle. So it's not too bad for Bitcoin, but for the other altcoins, it's a totally different story. So don't take this message across and apply to the other altcoins. So for Bitcoin itself, from the big picture perspective, it's not too bad yet. But don't forget, I have already shared in previous sessions that the chance of it coming down for a sign of weakness is still pretty high, whereas it's going for an even higher all-time high, somewhere around 140 or to even 150-ish K is possible. The downside risk is still bigger. And from what has happened this week, if we turn on the Bollinger Band Keltner squeeze, you see this shade at the back, right? So technically speaking, we have entered a squeeze. Even though I shared for my own definition, we have entered a squeeze since September. So we are literally just in a very short moment before a bigger swing comes in. So if you're new to this Bollinger Band Keltner squeeze, BB Keltner, you can search on TradingView. It's free. Basically what we had in previous periods, when there was a squeeze, there will be bigger price swings, not only to the upside. It's going to swing both sides, whether it swing to the upside first and then to the downside, or to the downside first. You see another squeeze over here, yeah? To the downside first for prolonged period before an upswing comes back. That totally depends on what news are being sold at that particular moment in time. Okay, be very clear with this. While the price of Bitcoin is still within this upward trend, this pink box, the Keltner Bollinger Band squeeze is in effect. So meaning the swing will probably swing it outside of this horizontal blue box, this horizontal trading zone, and potentially swinging outside of this pink box as well, this upward channel box. Reason I shared previously, but in case there are new joiners, look at this trend over here during the buying climax back in the beginning of this, not this year, last year actually, and then all the way to the end of last year. So that 9 to 10 months period, it was pretty straight. So those two peaks were both touching this upward trend line. But then when we get to the current upthrust or upthrust of the distribution, depending whether we're talking about the yellow or the blue scenario, not only we've got a plateau here, it's not an issue if we've got this plateau, because it happened both for the buying climax and the upthrust, and then it came down and then came back up again. That's not the big issue. The bigger issue is before the plateau, we're getting near to this ceiling of the channel box by any of these peaks. So meaning it has turned to a declining momentum for the price climb. So whether it will continue to trade sideways or actually dying further down, especially after the crash, that's something we have to closely monitor, because the crash proved that while Bitcoin seems to be stronger than the altcoins, is still there are people still not as confident. This drop, that's over 16% from the peak, the all-time high, to where we were during the drop, and we still have a day and 28 hours, 44 hours before this week's candle closes. Who knows what would happen during the weekend, right? And so be very cautious. We have seen the squeeze that lasted for only 1 week back in May 2022, and this signal has already signed. The alarm has been turned on, so the big swing may come in anytime now. And let's go to the daily as well, because when we look at the weekly, the volume bar doesn't seem to be as crazy as the price drop across the board. But if we go to the daily, that's a different story. You see the volume bar of yesterday is shot up very high, almost, it's actually 3 times over the average of what we had for almost 3 months. Since late July, we haven't had such a volume. We were only a third or even 25% to what we have yesterday. So that's pretty alarming. The only relieving sign is when the price, like I said in the beginning, get close to the purple key level of 104K. It rebounded quickly, not only just above the purple key level. It returned, it cleared the purple, cleared this blue horizontal trading box, the channel, horizontal channel, and also this yellow dashed intermediate support line. So that intermediate support is extended from the automatic reaction, and also the sign of weakness back in August, both. So that's the important part of it. So whether you like to call this a second test or an upthrust after distribution 2, it's totally up to you, because to me they are all tests of demand. And right now, not only that the price has been pushed below this center line of the box, not a big issue itself, because the pink box is pretty wide. That's the upward channel, upward trading channel over there. I should remove this, that's no longer relevant. So the key is for how long this is going to stay within the blue box as well as above the purple key level. Because if the price falls below the purple key level, much like what it did back in June this year, not too long from now, it's only 4 months back, or even less than that because it's end of June. If it really comes back down to this yellow support line, the risk of this is because we are getting very close to the bottom edge of this upward channel box, the pink line over there. So if it comes down now, there is a chance that it falls outside of this upward channel, and that indication is bigger than anything else. That means it's going to fall through what the bulls has built since October 2003, 2 years ago. So if that trend breaks, it's better to switch to the weekly, it's clearer. If I don't want to turn that off because you need to see the pink box. If that breaks, what's going to happen is the first support is 91K. That's where the automatic reaction 2 was. That's after that peak over here during December last year. So December 30th, that week, in 2024, it was when the price found support at 91k. If the price falls outside of this pink box, that's the very first key level that the price is going to test. And then eventually, this sign of weakness level back in March this year, it's the second level, the 74k. That's where the price is going to go to if 91k doesn't provide sufficient defense. And also, because this blue line has got into this long-term playground zone, the white box, this long-term playground zone, meaning there's a chance for it to go even further back to, I don't want to say that level, but the yellow or even the orange, because that's where the price started to climb back in 2023. Well, people have been arguing or raising questions about, we've got potentially like lowering of interest rates coming. It's pretty much been announced, but then the thing is, like the earlier live session I had already mentioned, it depends on how the big guys are trying to use the news. They can use the news in positive ways or negative ways. So it's a very risky situation if the price ever goes outside of this pink box. So for the coming weeks, it's going to be, or not even weeks, for the coming days, it's going to be very important for the price to show us whether it's going to stay within this horizontal trading zone that started since beginning of July. If it it's really going to fall outside of this zone and goes even below the purple key area, the date that we are going to look at, always I want you to have these three takeaways. So we're getting to the point 3 now, the breakout timing. So this over here leads to these time points. One over here, if the price really comes back to where it touched yesterday and trade horizontal. This time point, it's mid-December. Well, actually not. If it goes here, it's December. But if it's above the purple but below the blue, it's mid-January. So 2 time points here, respectively, depending on where the price is going to trade. That's going to be a breakout confirmation. So meaning if it's trading over here, it either climbs back to the above the purple, staying within the pink box, that's a positive sign for the bulls, or it's going to break outside of this upward trend and go challenge the key levels below, like I mentioned, the 91k. So that's the first case if the price falls below the purple key level. This is the time point, mid-December. However, if it doesn't, if it only falls to where it dropped to yesterday, where it touched yesterday, above the 104k, it can trade sideways till mid-January before there is pressure to break out. So either it breaks to the upside again, staying within the pink, and more importantly back to the horizontal trading zone, then it will have another few months of honeymoon all the way to mid of next year. Obviously it has to stay above this yellow dashed line as well. That's where the buying climax back in May was, and there was a time point here in mid-February. So multiple time points depending on what the price actions are, but those are two like less bullish scenario, assuming if the price is able to stay above this yellow dashed line. Remember I mentioned the automatic reaction and sign of weakness over here forming this line, also the spine climax as well. So it's, although it's not a key level, it's still significantly strong. That's why even today, when the price fell to that level, it rebounded. So let me enlarge this. If you're watching on mobile phone, you can see what I was talking about. You see the wick? I didn't draw this line just now. You know, when I open this, the line is already here. I've drawn this a few sessions back. So you see it's the support is really in effect. Hopefully it stay the same if you want Bitcoin to continue its strength or the trend upwards to another all-time high. So overall, it's not too bad for Bitcoin even after what happened like a couple of hours back. But it's still risky. The downside risk is still there. So finger crossed that Bitcoin is going to stay up, not like the other altcoins where some has already fell to an accumulation zone. Bitcoin is still a bit far from that. So good luck, and remember, always have your stop loss